Welcome to day 101 of me backtesting my way to success. The first trade was a loss, and the reasons why I entered were this first of all, this 1 hour order block and this 2 hour fair value gap that you can see right here, as well as the equilibrium from the swing high to the swing low. And then I entered on an impulsive move away, so a reaction with the golden zone and those confluences right here, stop loss above it, take profit at the swing low. And yeah, I got stopped out, and it's pretty simple why I could have just scaled into I should have just zoomed out to see that this is a retracement. It probably fits with the golden zone if I look at it. Yeah, it fits with the golden zone. I mean, no fair value gap, but still, it really just looks like, especially since we're in an uptrend, it just looks like it just is a retracement. And yeah, what I can take from this trade, obviously, to be patient, since if I had been patient, then I would have zoomed out, would have seen this, that it's just a retracement, and well, then yeah, also what I can practically do is just look at the higher time frames, look at the whole trend before entering for a trade. And so let's just see how the next trade goes. The next trade was a loss, and the reasons why I entered were this 1 hour order block, 4 hour fair value gap, the AMD cycle, consolidation, manipulation, distribution, and the distribution into fair value gap order block, like I said just now. Then on this impulsive movement, I entered. My stop loss was at the top of the order block, and my take profits were at the volume area of this consolidation, as well as the swing, or as well as the consolidation low that was made. And yeah, as you can clearly see, I got stopped out because of my stop loss. It was too tight. I should have given it a bit more breathing room. Well, then I definitely wouldn't have taken this first TP, but I guess 1 TP with a win is better than 2 TPs, tight stop loss, and a loss. Yeah, so obviously what I can take from this trade, give my stop loss more breathing room, and yeah, let's just see how the next trade goes. The next trade was also a loss, and it was pretty. I mean, it's kind of funny that I'm getting such a loss after just the last trade, and it wasn't really long ago. I think it was like somewhere in here, wasn't it? Right here, yeah, right here. It was right here, and then right here, same thing again, but this time it was. It was just okay. So the reasons as to why I entered were this 4 hour fair value gap, equilibrium from the swing low to the swing high, since we had a good impulsive movement. And I did not think that this was the AMD cycle right there, because as you can see, well, actually, let me show it to you right here on the previous example. Consolidation, manipulation, distribution, and as you can see in the higher time frames, huge wick. That means that that it is a good manipulation usually. Right here, 4 hours, pretty high time frame. We have absolutely no wick. In a daily, I mean, we have a huge wick in a daily, but in a daily it's also no consolidation. So since in the 4 hour it's clearly a consolidation. That's why I went for the equilibrium, and then I entered on a really good impulsive movement, which was right here. As you can see, really impulsive. My take profit was at the swing high, and my stop loss was at first right here. I thought, nah, this is too much breathing room. Let me give it this much breathing room. As you can see, I got stopped out by legit. So I literally moved it by 1, and I'm like, then I wouldn't have gotten stopped out. And it's you know, it's just ironic that I'm losing a trade like pixel not perfect, not pixel perfectly. It's exactly the opposite. Had I given it one more pixel of breathing room, then I wouldn't have gotten stopped out. But yeah, I guess maybe because of this irony, I will actually learn it. But yeah, that's pretty ironic. So let's no, actually, that's already it for today's episode, and we'll see you in the next one.